Heyo, good morning, everybody. Welcome back to another pre-market watch list here today. Yesterday turned out to be a decent trading day throughout the day. Definitely had some good movement. Heyo, good morning, everybody. Sorry about that. Might have heard an echo there for about a half a second. My apologies. So today we're going to be focusing primarily on still earnings reports. Again, no penny stocks really in play, at least not that I see. There might be something out there, but for the most part, everything that I've seen this morning, penny stock wise, is a no-go. So today, no penny stocks to be seen that we like. Okay. So today we're going to be focusing on Apple, AAPL. Sure, you guys can figure that one out on your own. But again, they reported earnings. Stock goes from 205 all the way to 218. It's a big move. It creates volatility. There's going to be opportunity here. So basically, same thing as always. Never changes. Really, you have your, excuse me, let me map this out. You have your pre-market high, you have your pre-market consolidation, which just broke, so they're no longer paying attention to that. I guess you could, but you have your pre-market kind of consolidation, hold to support. You have this dip right here in after hours trading at 214. These are primarily the three main levels to watch for going into today. If Apple drops all the way down to 214.21, there's going to be a good chance that it bounces off that level, so you could watch 214.21 as a potential level for a dip buy. If it does not go down to here for a dip buy, then you have to pay attention to candlestick formation to see if it's going to move higher, okay? If stocks, and that's another thing, guys, if you're looking at a stock and you have this level mapped out where you know it has a good chance of maybe reversing or bouncing, right? And then it doesn't even come close to getting there, and then the stock still moves up, right, in a bullish manner. And then you say to yourself, well, why didn't it go to this support? Or why didn't it go all the way down and bounce off the support? How could I have known that it was just going to start moving at this random price in the middle of the chart? Doesn't everything we know or everything we've been taught about trading mean it's supposed to go to support and go off of support? Yeah, it does. Doesn't mean it has to. So there's many times where you might see Apple come down to like 216 and then it starts to go, right? If it's not coming down to a specific or defined price level where you'd like to buy for a bounce based off of price level, then it generally comes down to a candlestick formation that you have to be able to recognize so that you don't miss the move. Okay, so just because stocks don't go to certain levels doesn't mean that they won't play out really well. It just means it didn't go to that level. And for whatever reason, it didn't make it there. And since it didn't make it there, in that current moment in time, in real time, you're going to have to be able to identify whether or not it is a good setup to be trading. So, and the reason I say this is because we come on and we make these watch lists all the time, and sometimes the stocks don't follow the watch list at all, right? Or to do anything that we would like to have done doesn't mean that we won't trade it. It just means that based on the information the stock has given us and the levels that the stock has told us to go off of, even though it doesn't meet or, follow any of those levels, doesn't mean that it won't still be a good stock to trade, right? So keep that in mind. So yes, today, excuse me. Let me look something up real fast. Just want to make sure I don't get the times wrong. Yeah, so the FOMC meeting today, we're going to be discussing whether or not the Fed cuts rates. To be completely honest, I don't personally see the Fed's cutting rates. So what's a candle formation to look for? It could be a hammer candle. It could be a bullish engulfing candle. It could be a consolidational hold of candles, multiple lower wick candles that signifies a short squeeze might be coming. There's many formations. It's something you'll have to practice with in real time. I couldn't say it's going to be this one because you could have a bullish candle formation, you could have a hammer candle formation, you could have a tweezer bottom, you could just have a consolidational hold of multiple candles creating a flat top over 1 minute candles that leads towards a breakout. Could be many formations. Really? You think the Fed's gonna cut? They might. They might cut rates. Honestly, I personally hope that they don't. Because there's really no reason to cut rates at this current moment in time, based on what they're all saying. They all say the economy is really, really good. So in reality, they shouldn't have to cut rates. If they do cut rates, then I'd be more nervous. Because if the economy is as strong as all the analysts and everybody says it is, then there'd be no need to cut interest rates. You just leave them the same. But if they do cut rates, then it's like, well, why would you cut rates on a really strong economy? You shouldn't have to do so unless there's something that you guys aren't telling us or that you don't want to scare the public of. And that's something that you should always remember. Mainstream media will never tell you the full truth, no matter what, because they do not want to start an all-out panic and outrage within the public unless they absolutely have to. So an example of this would be like, hey guys, market looks really strong even though it's probably going to crash, but we're going to tell you everything looks really strong so that you don't freak out and that you don't panic sell and help crash the market. All right, so hey guys, here we are and the market looks really strong, wouldn't have anything to worry about. 3 weeks later, the market crashes. Oh boy, guys, the market has crashed. Well, again, if they knew about it, they wouldn't tell you. Okay, so that's why you generally have people like myself, Peter Schiff, and many others on YouTube that speak their mind and let you know probably what's going to happen when the mainstream media won't. That's why you have very many successful YouTube channels, surrounded around politics and the stock market and many controversial topics because, again, people on YouTube, I mean, it's not like they have this massive agenda they have to follow. No, they're just a one single individual speaking their mind on what they truly believe. So there's less string pulling going on there, whereas in the mainstream media, you have really specific agendas that you're supposed to follow, political correctness, blah, blah, blah. Exactly, and that's why strings get pulled on mainstream media. Okay? If they cut rates, will gold go up? So the way you look at it, it's kind of a catch-22 because gold goes up when the market, well, let me rephrase that. Gold goes up when there's worries of looming recession, things like that. So if they cut rates, right, then if they were to cut rates on this so-called really good economy, in theory, if you're playing like the reverse psychology there, then yeah, gold would go up because people would say, see, they're cutting rates because the economy truly isn't that strong, right? Buy more gold. That's kind of that concept or that belief there. Connor lapping, yeah, you're absolutely right. But you'd have to elaborate more, right? When you say don't trade Apple because it's like buying Bitcoin at 20,000. Well, for one, I mean, I don't disagree with you, but no, it's absolutely nothing like buying Bitcoin at 20,000 after the earnings report volatility, because Bitcoin was and is the biggest bubble to date that there ever has been on planet Earth. Whereas And the Bitcoin is based off of belief and hope that it does one day become a widely acceptable and used currency of the future. Whereas Apple is a stable stock in which if you were to go out on the street right now or to your local bar and you put your hand into every civilian's pockets, you would pull out not a Bitcoin, but you'd pull out an Apple phone. So Apple's products are widely acceptable and used amongst current day civilization. So no, very unlike Bitcoin, but true to the fact that you said it is extreme volatility. Yes, there is extreme volatility. Right now, Apple is into a 52-week high, so it is really at a very high price to be purchasing in regards to where the price action has been and where it's currently at. So yes, buying right now at bell open on this date to hold, you probably would find yourself in the red, at some point, but to trade it, you'll probably have some opportunities, right? So, and there's nothing wrong with what you said. Again, it's happened to me many times where I'm like, hey guys, I wouldn't buy this. And when I'm saying I wouldn't buy it, it's like, I wouldn't buy it because it's too high in a move. It's been moving for however many days, but doesn't mean that you could not make money trading it. Just going through some stuff here. Oh, sorry. Give me a second. Yeah, exactly. The rate cuts already been priced into the market. So even if they do, right? So even if they do cut rates, I think we'll see like a short-term push in the market, and then short-term push in the market, and then majority of it will probably end up coming back down shortly after. So yeah, P Jonely. So generally if you wait, 10, 15, even 20 minutes after market open, the charts kind of slow down, they become more developed, and there's more and they do become easier to trade, right? The early morning volatility is where the biggest moves happen, so where you can win and lose the most amount of money within one transaction, and so to speak. But later in the day, the chart becomes more developed and there becomes more levels to trade off of based on the early morning intraday trading. So the charts generally become a little bit more easy to read early in the morning. A little bit later in the day or later morning. Early morning, it's all based on volatility and picking direction, trying to ride momentum, which momentum can shift pretty easily at any point. But yeah, generally, if you stay away for the first 5 to 10 minutes, 15, 20 minutes, you'll find yourself losing less. Maybe not winning as much on some of the winners because you're not having that big early morning volatility push, but you'll find yourself losing less and probably making better trades. Nope, never use it. Nope, haven't talked about BYND. Actually, the stocks on the watch list aren't even really supposed to be there. But yeah, now that we've kind of spieled on for a little bit, I want to talk about Roku. So Roku, I actually got short in the morning, got squeezed like instantly, lost. I think it was like $600 or something like that. It was just a terrible trade. Really wanted to see Roku break down. Should have known better than to try and short it on its first attempt break. But anyways, mistakes get made. So today, here's something to pay attention to. Over 106.50, you might see a nice little push on Roku because that was kind of the flat top consolidation from yesterday. And with this big down dropping day here, there's really no resistance on this day to keep it from having a nice push over 106.50. So Roku kind of watching over the 106.50 mark. If it gets there today, that's where I'd be interested in possibly taking a long. If it doesn't kind of break over that in a good manner, then I won't trade it, right? If it has one candle spike over, kind of come back down again, I'm not going to buy that. If it has a candle go over, hold over 106.50s, then yes, I'd be more interested in buying that. All right, something else too possible. AMD is another earnings report, but this one's kind of a wacky chart so far. But it is creating a good wedge formation, right? If you look, we do have decent wedging, so we kind of is following trend there. That doesn't really anything. So you kind of have this big developing wedge formation, and we have been rolling down. So for right now, I'm probably going to remain bearish on AMD to start. Don't know if I'll actually trade it today, but it does have a nice wedge formation. Ideally, whatever way this wedge breaks, there's a good chance the stock's going to move in that direction. So if we start to break this wedge to the downside, I'd probably want to be short bias on it to start on the day. INPH was another one, another earnings report. Well, of course, that's already moving pre-market. That's fantastically annoying. But anyways, INPH was another one to watch this morning. We're kind of watching it. Didn't really have the greatest kind of setup. Well, it had a decently looking good setup, but anyways, INPH is moving. This is a stock that's been trending beautifully over the past year, so probably going to remain bullish on the stock. Might even grab shares on a dip at some point to hold long term. I just got price target upgrades all the way to 120, so for a $25 stock to get a price target upgrade all the way to 100, yeah, it seems a little bit kind of like, meh, maybe, but then when you look at the chart and you realize it's basically been trending straight up for the past 2 years or so, yeah, that probably does have a good chance of reaching 100 at some point. So worth watching. And it was a penny stock before. Anytime a penny stock goes up this big, that means it's a part of the 10% of penny stocks that don't fail. Again, remember, 90% of penny stocks do fail. So if you see a penny stock go from 4 all the way to 25 and it hasn't crashed, it's most likely a part of the 10% that do succeed. So, yep, something to keep an eye on, ENPH for sure. Yeah, yeah, we'll be diversifying. I mean, yeah, I always plan to diversify. Real estate is a great way to build wealth. Yeah, I already have, working on a second business, already have one business, trading, how I basically have 3 businesses. YouTube is a business, but yeah, so, yep, be moving into real estate at some point in my life. Again, home prices are just a little bit expensive. I've been saying that for years now, and they still just don't really come down. So I might just have to give in and start buying regardless. So yeah, real estate's something I'll get into, probably doing rental properties. I'd like to get up to the point where I have, 100, 200 rental properties and just have a property management company take care of the majority of it, so that way I don't have to do too much work in regards to myself. But yeah, real estate is a great way to build wealth. The prices of homes naturally go up, right? Again, everyone's like, well, if I buy a house now, is it going to make me money later? And the question I always ask you is, how much was gas when you were a kid? Or if you're relatively older, how much was gas 50 years ago to compare to today? How much was a pack of cigarettes a year, or 40 years ago compared to today, right? How much was your house 50 years ago compared to today? So what we're getting at is, unless the government makes a dramatic change in our monetary policy and currency, then your home prices will naturally go up, because things naturally appreciate over time, just by the natural flow of our economy, monetary policy, and the way that we work with our currency. So yeah, you would, if you even if I stop being a stickler and would just go out and buy a house right now at relatively market top or top value, even so in 20 years, 20, 30 years, it would probably be above the value I bought it for anyways. No, actually, it's the other way around, Orlando. If the Fed cut rates, it'd actually help real estate. If they raised rates, then it would hurt real estate because then the interest rates on everybody's mortgages are going to increase, and there'd be an increase in the interest rate that you'd be paying on loans for cars and loans for houses. Right? It's when the interest rates are low that would actually help a housing market. Because interest rates are so low, people would be more willing to take out loans on a more expensive house or just on a house in general because they'd have to pay less principal than they would if the interest rate was 35%, right? Imagine taking a loan on a house right now, with an interest rate of like 15-30%. That would just be ridiculous, right? No one would do it. But imagine taking a loan out on a house with an interest rate of 1%. Sure, I'll do that. 1%? Are you kidding me? Imagine a 1% on $100,000 is $1,000. That's your principal. It's like nothing, right? So that's also why we've had such a big booming economy for the past 10, 12 years. Interest rates were basically at zero, and then they stayed really low for the longest time while adding quantitative easing into the market. Companies were taking loans out like crazy with no interest to pay back. Why? It's free money. It's basically free money, right? If I said to you, sure, I'll give you $1 million right now, just give me back the $1 million when you're done. Like, oh. And you have no problem paying it back. So, sure. Why not? Right? So, anyways, yeah, with that being said, so mainly going to be following INPH, right? That's it, and Apple today, right? INPH and Apple are going to be the two main stocks that I'll primarily be watching. Excuse me. Yeah, the best time to buy a house is when the market crashes. You're right? And here's the thing, though. Even though the best time to buy, but now you have to think wisely, because the best time to buy a house is when the market crashes. When the market crashes, there is also the chance that you may get laid off. When the market crashes, your 401k value or the value of your long-term or life savings, if it's invested within the market, will be slashed by 30 to possibly even 50%, maybe more, depending on how bad it is. So your wealth will decrease by 30, 40 some odd percent during a market crash, right? And then when the market crashes, generally, what's going to happen is, there'll be interest rate. They're going to increase. Interest rates will probably increase a little bit, due to just the markets going down, right? Interest rates are going to increase. Okay. Then banks, when the market goes down, right, and things start to sell off, people start to make less money. Loans, if anybody has current loans, right, like, let's say I have a loan for my house or whatever, and I have $50,000 more to pay on my loan for my house, whatever. And the market crashes. I get laid off, right? Now it becomes harder for me to pay back my loan to the bank. Now the now the bank is making less money. Now that the bank's making less money, they are less inclined to give out newer loans to new borrowers. So now the banks stop lending as much money, which makes it harder for you to get a loan to buy a house at these ridiculously low prices, while 30 to 40% of your long-term wealth just got slashed in the market crash. So now, are you even comfortable going out and buying a house knowing that 30% of your wealth has been taken out, right? not truly because you can hold and it can recover, but the mindset and the psychology in that moment in time is I am 30% poorer than when I just was. The banks are less inclined to give out loans and the interest rates are going to be higher than what they were. So though the prices are great, the economy is not. And the stability, it all plays a role. All right, you can only have, it's like the good and evil, good and bad. You got to have one and the other, but both together. Right? So, yeah, exactly. Actually, be custom. Yeah, this is the time to sell your house. There's actually this house right behind my house right now that I want to buy. He's asking $225,000. It's 3 bedrooms, 1 bath, detached garage. Garage is fairly big, and it's not too far off the lake. Right now, I'm on lakefront property, and I don't necessarily care to stay on the lakefront property. It'd be nice, but the property tax would be cheaper, so I'd probably just want to move off lakefront property eventually. But yeah, I mean, he's asking $225,000. I mean, I can already say the house isn't worth more than $170,000, so it's like you already see the predicament. Anyways, well, all right, guys, we'll call it there. So again, main thing today is Apple. Main thing today is going to be following INPH. Again, it's all earnings reports that we're primarily following for right now on the day. We do have the Feds to potentially and or maybe they'll cut interest rates today. I just posted a link for our premium chat room. For those of you that are interested, I just posted the link in the chat. That way you don't have to go to the description to find it. If you're newer, feel free to check it out. But again, yeah, so main thing to watch for today is that the Feds cut rates. The market tends to be a little bit more relaxed and calm until that meeting has been, taken care of and done. All right. So everybody have a good rest of your day, and I'll see you guys tomorrow morning for another watch list, another chat. Other than that, everybody take care. Have a good day.